So let's start with this question I keep getting asked. Could HBAR alone retire you? Now, I know what you're thinking. On the surface, that sounds like one of those wild moonshot questions people throw around in crypto. But let's not dismiss it right away. Because if you've been paying attention to the markets, the technology, the adoption curve, and the partnerships, the answer isn't as far-fetched as some might believe. And I want to walk you through it step by step, not in the hype way you see all over Twitter or TikTok, but in a grounded, logical, let's look at the data kind of way. Because here's the truth. Financial freedom, retirement, and wealth building have always been about timing, access, and conviction. Whether you were holding Apple stock in the 90s, buying Amazon when people thought it was just an online bookstore, or picking up Bitcoin when everyone called it internet monopoly money, retirement-level wealth has always come from spotting something real before the rest of the world wakes up to it. So, could HBAR retire you? Let's break that down. First off, what is retirement anyway? It's not just about quitting your job and sitting on a beach somewhere. For most people, retirement means having enough financial independence to live life on your own terms without worrying about your bills, your future, or whether your bank account can handle the next emergency. And in today's economy, where inflation is chewing through savings faster than ever, where housing prices are outpacing salaries, and where pensions are becoming ancient history, people are looking for new vehicles to build wealth. Traditionally, that vehicle has been stocks, bonds, or real estate. But look around, the average return on the stock market is about 7 to 10% annually, bonds are giving you maybe 2 to 3% if you're lucky, and real estate is locked up with high entry costs, maintenance, and volatility depending on where you live. Compare that to crypto, which, yes, is volatile, but also has shown some of the most explosive returns in financial history. And that brings us back to HBAR. Now, if you don't know, HBAR is the native token of Hedera Hashgraph, and what makes Hedera different from your typical blockchain project is its governance and use cases. We're talking about a distributed ledger technology that's not run by anonymous developers in a basement somewhere, but by a governing council of global giants, Google, IBM, Boeing, LG, Standard Bank, and more. When you have that kind of credibility backing a project, you have to stop and think, wait a second, why are all these Fortune 500 companies sitting on this council if this is just some pump and dump coin? And that's where the conversation about retirement gets serious. See, when people talk about retirement through crypto, they're not really saying, I want to become a billionaire overnight. What they're really saying is, I want one smart, asymmetric bet that could free me from financial struggle if it plays out. And asymmetric bets are exactly what crypto has been delivering for the past decade. Think about it. If you put $1,000 into Ethereum in 2016, by the 2021 bull run, you'd have been sitting on more than $500,000. That's life-changing money. If you bought Bitcoin in 2012, you could have retired 5 times over by now. And these weren't insider-only opportunities. Regular people, the kind of folks working 9 to 5 jobs, were able to grab those assets before the world caught up. Now, does that guarantee HBAR will do the same? No. But here's where it gets interesting. HBAR isn't just another crypto promising to be the future of money. It's carving out real-world use cases in supply chain management, energy markets, decentralized identity, and payments infrastructure. Just to give you a concrete example, the Shinhan Bank of South Korea, one of the largest banks in Asia, has already tested cross-border payments on Hedera. We're not talking about some hypothetical white paper idea, we're talking about real banks, real money, real tests. And if that doesn't open your eyes, let me give you another example. The United Kingdom's National Health Service, NHS, piloted Hedera for secure, tamper-proof data collection during the COVID-19 pandemic. Why? Because they needed speed, transparency, and security, and Hedera delivered. Now let's zoom out. Retirement isn't just about holding an asset. It's about holding something that grows as the world grows. And that's why I believe HBAR has that potential. Because Hedera isn't chasing hype, it's embedding itself quietly into the fabric of global industries. Think about Google. When was the last time you saw them attach their name to a crypto project? They're notoriously conservative about brand association, but they sit on Hedera's governing council. Same with Boeing, same with IBM. And these aren't companies looking to make a quick buck. They're playing the long game. They see Hedera as infrastructure. So when people ask me, can HBAR retire you? My response is always, It depends on two things: your conviction and your timing. Because here's the hard truth. Most people miss out on life-changing opportunities not because they don't exist, but because they either didn't believe in them when it mattered, or they got shaken out too early. If you're buying HBAR today and expecting retirement tomorrow, that's not realistic. But if you're buying HBAR today with a 5 to 10-year horizon, believing in the technology, the partnerships, and the adoption curve, then yeah, there's a world where HBAR could absolutely be the thing that sets you free. But let's not just take my word for it. Look at the numbers. In 2022, Hedera processed billions of transactions, and unlike Ethereum or Bitcoin, those transactions weren't speculative buys and sells, they were enterprise-grade use cases. The average fee per transaction? A fraction of a cent. Compare that to Ethereum, where gas fees during peak times were hitting $50 to $100 just to move tokens. If you're a bank, a supply chain company, or a healthcare provider, which system makes more sense to you? This is why some analysts have started calling Hedera a sleeping giant in the crypto space. Not because it's the loudest, not because it's making the most headlines, but because it's slowly, steadily building a foundation that could one day rival the big players. And if you know anything about investing, you know this: the real money is made before the headlines hit. Now, let's zoom in a little bit deeper and talk about why HBAR has a legitimate shot at being that retirement coin for early believers. Because it's not enough to just say, oh, it has potential. Everything has potential on paper, right? But in investing, you've got to separate the noise from the signal. So what is the signal here? For me, there are three key signals: governance, scalability, and adoption. Let's start with governance. One of the biggest criticisms of crypto has always been this Wild West vibe: anonymous teams, projects vanishing overnight, scams left and right. That's why so many institutions have hesitated to dive in. But Hedera turned that model upside down. Instead of going anonymous and decentralized to the point of chaos, they said, let's create a council of trusted, globally recognized organizations to govern the network. And this isn't a theory, they've actually done it. You've got Google, IBM, Boeing, LG, Deutsche Telekom, Standard Bank, Nomura Holdings. The list keeps growing. These aren't no-name firms. These are companies with billions, sometimes trillions, in market capitalization and decades of reputation to protect. They don't just jump on hype. Let's take Google, for example. Back in 2020, Google Cloud announced it was joining the Hedera Governing Council. And they didn't just join for the PR, they started running a node on the Hedera network. Now, why would Google, one of the biggest cloud providers in the world, bother to lend its brand and infrastructure to Hedera unless they saw real, long-term value? Google doesn't chase quick flips. They build infrastructure. And if Hedera is infrastructure in Google's eyes, you better believe there's weight behind that. Then you've got IBM, which has been dabbling in blockchain and distributed ledger solutions for years, especially in supply chain and enterprise blockchain. IBM isn't interested in a meme coin. They're interested in what Hedera's unique architecture can do for enterprise clients. And when you're talking enterprise, you're talking big money, stable demand, and adoption at scale. Now, why does governance matter for your retirement? Simple. Trust. Institutions are not going to run trillions of dollars in transactions through a system that could be hijacked by some random whale or manipulated by shadowy insiders. They need a ledger they can trust. And Hedera is literally designed for that trust. Now let's move on to scalability. This is the Achilles heel of so many blockchains. Bitcoin, for example, can handle roughly 7 transactions per second. 7. Ethereum does a bit better, but even with scaling upgrades, it struggles under heavy use. That's why gas fees spike so much. Meanwhile, Visa and MasterCard process thousands of transactions per second without breaking a sweat. So, if crypto is going to become the backbone of global finance, it needs to scale. And here's where Hedera stands out. The Hedera network, using its Hashgraph consensus, can handle over 10,000 transactions per second in real-world conditions. We're talking Visa-level scalability, but with crypto-native features. And that's not just theory. It's been stress-tested with actual enterprise applications. Here's a real-world example. AdStacks, an advertising platform, processed over 1 billion transactions on Hedera. Billion with a B. And those weren't just speculative token swaps. Those were ad impressions and events being logged in real time on the network. That's utility at scale. So, When people say, yeah, but isn't Hedera just another altcoin? I tell them, no. It's solving the scalability issue that has held back blockchain adoption for years. And if you don't think scalability is a retirement-level play, just remember this. The entire reason Amazon became the giant it is today was because it figured out how to scale e-commerce better than anyone else. Scaling isn't sexy, but it's what makes billionaires. And then we come to adoption. Because you can have all the governance and scalability in the world, but if no one uses your network, what's the point? This is where Hedera is quietly making waves. Let's talk about Avery Dennison, a Fortune 500 packaging and labeling company. They built Atma.io, a connected product cloud, on Hedera. What does that mean? It means they're tracking billions of products, from sneakers to pharmaceuticals, on the Hedera network, giving brands and consumers real-time visibility into supply chains. That's not theory. That's not hype. That's a Fortune 500 company literally embedding Hedera into the flow of global commerce. Or consider the London School of Economics, which used Hedera for verifiable, tamper-proof academic credentials. Students can now prove their credentials instantly without waiting weeks for paper verifications. That's a problem solved in education using Hedera. Now here's the kicker. All these use cases generate transactions, and all those transactions require HBAR, which means the more adoption Hedera gets, the more demand there will be for the token itself. This isn't just speculation driving price, it's utility. And utility-driven demand is the holy grail of crypto investing. Think about Ethereum. The reason ETH became so valuable wasn't just because people liked it. It was because developers needed ETH to run their smart contracts, to mint NFTs, to use DeFi apps. Demand was baked into the system. Hedera has that same structure. Every transaction on the network, whether it's a supply chain update, a payment, an NFT mint, or a DeFi transfer, requires HBAR. That's what ties the network's growth directly to the token's value. So when we ask, could HBAR retire you? We have to consider governance builds trust, scalability enables mass adoption, and real-world use cases create utility-driven demand. Put those three together and what you have is the blueprint for exponential growth. Now, I'm not saying HBAR will 100x tomorrow, but let's look at the potential. As of today, BAR's market cap is sitting in the billions, not the hundreds of billions like Ethereum or Bitcoin. That means it still has room to grow. If Hedera were to simply reach the same market cap Ethereum has already achieved, you'd be looking at roughly a 20x to 30x from current levels. And that's not some moonshot fantasy, that's just catching up to Ethereum's proven adoption level. And if you think that's impossible, just remember, back in 2017, people laughed at the idea of Ethereum hitting $1,000. By 2021, it was trading above $4,000. Things that seem crazy in crypto suddenly become reality when adoption hits critical mass. Here's another way to look at it. The global payments market alone is projected to reach $3 trillion in value by 2030. If Hedera captures even a fraction of that, HBAR holders are going to be sitting very comfortably. And that's not counting supply chain, healthcare, advertising, and identity solutions. Now, some people might say, okay, but what about regulation? Won't governments clamp down on crypto? That's a fair concern. But here's the thing. Regulation is coming whether we like it or not. The difference is, some networks will be destroyed by regulation because they can't meet compliance standards, while others will thrive because they're already aligned with the needs of regulators and enterprises. Hedera is in the second camp. Its governance model, transparency, and corporate backing make it one of the most regulation-ready networks in the space. Look, I'm not here to promise you a Lamborghini or a private island. That's not what retirement is about for most people. Retirement is about peace of mind. It's about knowing you've made a smart bet on a system that's here to stay, and that bet could carry you into financial freedom. And if you ask me, Hedera has the fundamentals to be that bet. So let me circle back to the original question. Can HBAR retire you? My answer is this. It absolutely could if you approach it with patience, conviction, and a realistic time horizon. The people who retire on assets like this aren't the ones trying to flip for a quick 2x. They're the ones who held when it was boring, when nobody cared, and when the headlines weren't there yet. They're the ones who saw the signal in the noise. And right now, the signal is loud and clear. Now, let's be real for a second. Every time we talk about retirement and crypto, the elephant in the room is always regulation. Because people will say, well, what if governments ban it? What if the SEC cracks down? What if regulation wipes out the gains before they even materialize? And listen, those are valid concerns. You should never ignore them. But let's unpack this. Historically, when new technologies emerge, whether it's the internet, social media, or even online payments, there's always pushback. Governments, institutions, and regulators move slow, and their first instinct is to control what they don't understand. In the early days of the internet, governments literally tried to ban or restrict it in different ways. In the 1990s, Bill Clinton's administration proposed the Clipper chip, which would have allowed the government backdoor access into all private communications. That would have been catastrophic for internet privacy. But guess what? The idea collapsed, the internet moved forward, and now we can't imagine life without it. The same story is playing out with crypto. Yes, regulators are nervous. Yes, they're trying to figure out how to fit decentralized assets into centralized frameworks. But here's the catch. Crypto is no longer something they can ignore. It's too big, too global, and too deeply integrated into industries to just vanish. And here's where Hedera's model becomes crucial. Unlike some crypto projects that pride themselves on being rebellious and anti-establishment, Hedera has positioned itself as regulation-friendly from day one. It's got transparent governance through its council, it works directly with enterprises, and it has baked-in compliance features that make it palatable for governments and corporations alike. Let me give you a real-world angle. In 2023, the Bank of England and the European Central Bank were both deep into exploring central bank digital currencies, CBDCs. These are government-backed digital currencies meant to modernize payments. Now, imagine being a government official tasked with launching a CBDC. Are you really going to build it on an anonymous blockchain with questionable governance? Or are you going to look at something like Hedera with enterprise backing, stable performance, and predictable transaction fees? That's why I keep saying, Hedera isn't here to fight the system. It's here to become the system. And that's what makes HBAR so compelling from a retirement perspective. Because if adoption is coming, whether in payments, identity, or tokenized assets, HBAR is positioned to be the quiet backbone powering that infrastructure. But let's shift gears for a moment and talk about something even more personal. The psychology of retirement investing. See, the biggest challenge most people face isn't picking the right asset. It's holding it long enough to see it play out. There's a famous study from Fidelity Investments where they looked at which accounts performed the best over the long term. And do you know what they found? The best performing accounts weren't the ones with the most active trading strategies. They weren't the ones that timed the market. They were the accounts of people who forgot they even had an account. That's right. The people who literally did nothing outperformed everyone else. Why? Because they didn't sell. They didn't panic. They didn't try to outsmart the market. They just held. So the real question isn't, could HBAR retire you? The real question is, do you have the conviction to hold it long enough to find out? Let me give you a practical example. Imagine you buy $10,000 worth of HBAR today. The price is hovering around a few cents. Now imagine Hedera becomes a key player in tokenized assets, powering transactions for banks, governments, and enterprises worldwide. If HBAR reaches just $5, not $50, not $500, just $5, you're sitting on millions. Now, am I saying it's guaranteed to hit $5? Absolutely not. Nothing in investing is guaranteed. But I am saying the potential is there. And the asymmetry of that potential, the small downside versus the massive upside, is what makes it so attractive. But here's where most people get tripped up. They start thinking in terms of time frames that are too short. They expect life-changing wealth in 6 months or a year. And when that doesn't happen, they sell. But ask yourself this, did Amazon reach $1 trillion in market cap overnight? Did the internet change the world in a single year? No, these things take time. And the people who held through the noise were the ones who reaped the rewards. And I want to stress this again, Hedera isn't just building for crypto-native users. It's building for the real world. That's what separates it from 90% of projects out there. Take the energy sector as an example. In 2022, Hedera was chosen by the United Nations to track carbon emissions and credits through its Guardian platform. That's not a small proof of concept. That's the world's most important global body experimenting with Hedera for environmental accountability. If sustainability is going to be one of the biggest industries of the 21st century, and all signs say it will be, then Hedera is positioning itself to be the ledger of record. Now ask yourself, if Hedera becomes the global standard for carbon tracking, what do you think happens to the value of HBAR? Exactly. The pattern is clear. Disruptive technologies go through hype cycles, crashes, and years of being misunderstood before they finally break through. Hedera is no different. Right now, it's the misunderstood phase. In 10 years, could be the backbone of global digital infrastructure. So, could HBAR retire you? The honest answer is, it depends. It depends on your conviction, your patience, and your ability to see the bigger picture. But if you're asking me, does HBAR have the fundamentals, the partnerships, and the adoption potential to be that once-in-a-generation wealth opportunity? My answer is a resounding yes. And when I think about my own future, that's what excites me. Not just the numbers on a screen, but the possibility that this one decision to believe in Hedera early could be the difference between struggling to get by and living life on my own terms. So, I'll say it one more time. Wealth isn't built in the spotlight. It's built in the shadows, when nobody's paying attention. And right now, HBAR is still in the shadows. The only question is, will you still be holding when the spotlight finally finds it?